Hi everyone, this is Preetish Mohan from Finvolve Ventures. Welcome to our first video in this series where we talk about the different elements that make up the startup ecosystem and sort of break down those concepts step by step. So whether you're a wealth manager looking to expand your market, or whether you're just a curious individual looking to learn more about private equity investing and investing in the startup ecosystem, you're in the right place. Today, we're talking about one of the most important elements that go into investing in a startup, which is due diligence. Now, I understand it might sound a bit technical, but don't worry, I'm going to walk you through it step by step so that it's crystal clear. So what is due diligence exactly? Well, in a simplistic way, we can think of this as a detective's investigation. So whenever a venture capital firm or a private equity firm wants to invest into a company, they have to do their own homework. And a lot of homework goes into this. Venture capital firms and private equity firms, these investors usually don't go by the financials of the company or the pitch or merely their gut feeling. They rather engage in a series of evaluation processes that aims to affirm their investment decision. So, essentially, due diligence is a thorough, systematic research process that aims to verify and evaluate all aspects of the company in question, whether it be the financials, the product itself, the market, the team behind it, and every other aspect that you can consider imaginable. Through this process, the firm, the investor, aims to answer questions like, is this business sustainable? Is there a market at all for this business? And can the team execute the vision? So like I said, there are various aspects which are unraveled during a due diligence process. Now, while there are a lot of due diligence processes, the ones that are generally focused on are the four main processes, being financial, operational, commercial, and legal due diligence. The human factor. Now, venture capital firms also focus on the people behind the startup. So the founding team, the senior leadership team, they spend time with these people and essentially aim to understand the motive that drives them, their experience, their passion, and most importantly, if they can execute the business in question. So a great idea with the wrong team behind it could be catastrophic, but a decent idea with a stellar team, that could be good. As wealth managers are aware, and as people generally in the finance profession are aware, trust is paramount. So your clients want to know that they're backing not just a good business, but the right people as well. So why go through all of this? Well, essentially, due diligence helps us make informed decisions. It reduces uncertainty, and in a space as risky as startup investing, anything that reduces the element of risk is considered invaluable. Wealth managers, it can also give your clients a peace of mind. You're not just gambling, essentially you are making an informed decision. So why go through all of this? Well, due diligence essentially helps us make informed decisions. It reduces uncertainty, and when you're working in a space as risky as startup investing, anything that reduces the element of risk is invaluable. For wealth managers, it can also give your end clients the peace of mind to know that they're not just taking a gamble, they're making an educated investment. Common challenges in due diligence. Now, due diligence isn't always a straightforward process. Like I mentioned, it's very complex and there are a lot of intricacies that go into it. Startups by nature are young and often chaotic. Financial records might be messy, market predictions can be overly optimistic, and founders, well, they're usually juggling a lot. But that's where the art of venture capital comes in. A venture capital investor will sift through all of this chaos and try to find the real signals that indicate whether this company is going to be a success in the future or not. So there you have it, guys. Quick 5 minutes on what due diligence is and why it is so important in the world of private equity investments. Remember, it's essentially about doing your research, asking the right questions, and getting comfortable with the element of uncertainty. But when done right, this excruciating due diligence process is what can turn a risky investment into a calculated decision. Thank you so much everyone for watching. Please be sure to stay tuned as the series progresses. We'll be diving more into such relevant topics in the future, and hopefully by the end of it we will all come out more educated investors.